The biggest story today was a sudden shift from fear to cautious hope. Just when markets were bracing for a much bigger Middle East escalation, President Trump said he had agreed to a 2-week ceasefire with Iran. The deal is tied to one critical condition. Iran would need to suspend its blockade around the Strait of Hormuz, one of the most important oil routes in the world. That headline changed the mood fast. Oil prices dropped sharply, with U.S. crude falling about 9% to near $103 a barrel, because traders started to believe the worst-case supply shock might be avoided. Stock futures moved higher at the same time, with S&P 500 futures up about 1.6%, as investors rushed back into risk assets. But this is not a clean peace deal yet. Iran made clear it does not want just a short pause. According to Reuters, Tehran wants a permanent end to attacks, guarantees that strikes will not happen again, and compensation for damage. That means today's ceasefire story is really a fragile opening for talks, not a final solution. Why does this matter so much for investors? Because oil sits right in the middle of inflation, consumer spending, and market sentiment. If oil stays high, inflation pressure can rise again, and central banks may have less room to ease. New York Fed President John Williams even said the Middle East war would likely push inflation higher this year. So for Wall Street, this was not just a war headline, it was a rates, inflation, and risk appetite headline all at once. For now, the market is trading relief. But the next move will depend on whether this 2-week ceasefire turns into a real agreement or breaks down and sends oil and fear right back up. Don't forget to like and subscribe for more daily market recaps. This is Wilson.